What's going on, guys? Welcome back to the channel. My name is Mark and this is Entrepreneurial Finance. Today what we're going to do is dive a little bit deeper into Uber's financials, some factors for growth, some reason for concern, and why I personally believe you should be buying this stock. So Uber's a stock that I've been monitoring closely for a long time now, basically since their IPO last May, and they're trading near $70 billion currently, and they're finally close to eclipsing their IPO price. So Uber's not a company that I think should be worried about growth, okay? So they benefit greatly from brand recognition over their major competitors like Lyft, and they're just starting to talk about becoming profitable. Yes, that's right. At the time of this video, Uber's not a profitable company, despite being valued or trading at nearly $70 billion. So Uber's executives are saying that they expect to be profitable near the end of 2020, but if you look at their past couple quarters, they've lost over $1 billion each quarter. In the last 4 quarters, Uber's reported nothing but negative EPS. The one good thing to note, however, is if you just look at this table, they've actually reported positive earnings surprises 3 of the past 4 quarters. So what an earnings surprise is basically what the Wall Street analysts or all the main analysts that cover this stock, they put out their average estimates, and if you beat or do not beat that estimate, there's basically considered an earnings surprise. And if you do beat the estimate, it's a positive surprise, and if you don't beat it, it's a negative surprise. Now, I know what you're thinking. If this company isn't profitable, why would I even touch this stock? Why would I invest in this company? Let me tell you why. The market is a discounting machine, okay? So all future cash flows that this company is expected to make is discounted at an appropriate rate based usually their cost of capital. I'm not going to explain what cost of capital is in this video, and basically what that does is values that company today based on their future cash flows. So even though they're not making enough money to be profitable today, I am speculating that one day they will, and most of the market is expecting that as well. So despite not making a single dollar here since inception, Uber is raking in roughly $4 billion per quarter, which is absolutely incredible. So why aren't they profitable? So there's a lot of reasons. You know, it could be promotions, incentives, salaries, and the thing that's most interesting is they're an asset-light company, or they're an asset-less company. The liability of owning a car is put onto their employees, okay? So paying for insurance, paying for gas, paying for any damages and repairs, Uber does not cover the cost of the car that their drivers are driving. So in my opinion, there's lots of flex here and ways that Uber can cut down on their spending in order to easily become profitable. Anyways, you can see here that Yahoo has about 30 analysts, not Yahoo specifically, but Yahoo has tracked 30 analysts who are covering this stock, and they all have negative EPS forecasts into next year. So we have all analysts basically discussing losses into the foreseeable future here, while company executives are discussing about becoming profitable. On top of that, 27 of the 39 analysts covering this stock are recommending a buy or strong buy. Now, finance isn't just about listening to other people's opinions, it's about formulating your own. But the fact that most analysts are recommending this stock as a buy is typically a good sign, and their average price target is around $50, and at the time of this video, it's trading around $40, which is about a net gain of 25%. But as I just said, there's more to finance than just listening to the analysts. So let's actually take a look at their financials ourselves. So over the past 3 to 4 years, revenue's actually grown from $4 billion all the way to $14 billion, which really is astronomical growth. The bad news is that their operating expenses have also grown astronomically. So for fiscal year ended 2019, they reported a net loss of $8 billion after making $14 billion in revenue. Just think about that for a second. What the heck are they doing with all this money? Anyways, one good thing to note is that their debt actually isn't growing as fast and has only grown about $1.2 billion in the last 3 to 4 years, which is better than how much their operating expenses have gone up. Now, there's nothing really to note in the cash flow statement, so we're not going to look at that one. Another thing that I tend to check is the percentage of institutional ownership. Institutional owners consist of the big banks, the pension funds, private equity firms, yada, yada, yada. Basically, the big money. Now, over the years, there's been quite a bit of debate as to whether a high percentage of institutional ownership is good or bad. So basically, on one hand, you have the institutional ownership is the smart money, and following the smart money is usually a good thing. On the other hand, you have this short-termism outlook on companies where if institutional ownership don't see the results that they want to see quarter over quarter, they are going to end up selling off and driving the share price down. In my opinion, institutional ownership is a good thing, and Uber does have a high percentage of institutional ownership, sitting at about 60%, I believe. In my opinion, a high percentage of institutional ownership is typically a good thing because you're usually following that smart money, but you have to be careful about short-termism and if these companies are going to sell off and ultimately drive that share price down. But it is important to note that institutional clients typically do have a lower turnover rate than retail clients. Okay, so let's look at a few of their technical indicators here. You can see that currently at the time of this video, they're trading near $70 billion. Their competitor Lyft is trading near $15 billion, so you can see that they're just already that much larger than them. They're already about 4 to 5 times larger than Lyft, and they've added different parts to their business, such as Uber Eats. Now, they're trading closer to their 52-week high than to their 52-week low. Again, this doesn't necessarily mean that they're overvalued. It just means that basically the past few weeks, the past few months have been better for them than previous weeks. Okay, so 52-week low is $25, near $25. The 52-week high is about $48, and it's currently trading at $40. Now, as much as I'd love to go over the rest of the financial highlights here, the EPS, the return on assets, the return on equity, their trailing 12-month operating net income, you already know they're negative. It's not good to look at. You can see it up here on the screen here, but I'm not going to talk about them too much more. One thing, however, that I would like to highlight on this page is the short ratio. So the short ratio is essentially the number of shares outstanding that are being short sold. Okay, so in finance, you have the opportunity to buy long on a stock, which means you're betting on it appreciating, and then you have the opportunity to sell short, which basically means that you're betting on the company plummeting in share price. If you look at the short ratio, it's pretty low. To me, this is a trend indicator, so if this grows over time, it's basically a sentiment indicator. You can kind of see whether the sentiment of the company is souring or whether it's getting better. It's pretty low at this point at 1.76. Only 43 million of the 1.72 billion shares outstanding are currently short sold, which is a relatively small percentage, which indicates to me that most people are fairly bullish on this company. Okay, so now that we've done kind of a thorough analysis of their financials, let's talk a little bit about what's trending with them, things that are going on with them in the news, what people are talking about in regards to Uber. So first thing here, they're expanding their offices in Amsterdam. There is a lot of massive companies that do this on purpose, basically to evade taxes. So you all know about Amazon, you all know about Apple, and having all these tax havens across the world. For instance, I just read something about Amazon the other day that they basically paid a 1.2% effective tax rate on their taxable income, which is lower than most people pay on their income taxes. You basically see this all the time. You have these massive conglomerates, you have these massive tech companies, just these massive companies in general looking for tax loopholes across the world, and that's why a lot of them set up their headquarters in Europe, in places, you know, like Amsterdam. Technically, if we're talking technically, tax evasion isn't illegal, but tax fraud is. Now, this wouldn't be an Uber video if we didn't at least touch on Lyft a little bit. As I already mentioned, Lyft is trading near a $15 billion market cap, where Uber is trading near a $70 billion market cap. So you can already see that Uber is kind of the dominant company in this space. If you actually look at their performance and compare it against each other and normalize it, Lyft had actually been outperforming Uber for most of the time since they both IPO'd, but just recently Uber has actually eclipsed them and started to outperform them. That being said, they pretty much follow the same trend. They're in the same industry. They're both ride-sharing companies, so you do expect them to kind of follow the same trend in terms of performance. So Lyft actually dropped 10% this week when somebody within the company said they don't actually expect to be profitable for the next couple years, where if you compare and contrast that with Uber, they are expecting to be profitable hopefully by the end of 2020. Anyways, we're not going to go deep into Lyft's financials here. All you need to know, Uber is the dominant company in the space, and Lyft is probably their biggest competitor in North America, but at this point, they're certainly winning the race. Okay, so now that we've done a fairly thorough analysis in a short amount of time for Uber, I wanted to talk about some of the complaints about the company online. So I found a nice blog here where they outline some of their major concerns, and I'm just going to read them off one by one and kind of explain them. They basically increase driving a lot. That's kind of self-explanatory. That's the first one. The second one is most of their time is spent deadheading. So what that is if you have a high traffic area of where people call for Ubers, let's say at like a university or I don't know, some public transit way or something, they'll basically sit there and wait for people to request an Uber. So they're basically just sitting there idling, ruining the environment with all their carbon emissions. The third thing is they operate in transit-friendly areas. So you have, you know, politicians or governments pushing for a higher volume of transit workers or a higher volume of transit throughout the city, whether they're building trainways or adding additional bus routes and things like that. And then you basically have this company coming in and disrupting and taking all those riders who won't be taking any transit ways anymore. So again, the fourth one I already mentioned, they basically replace biking, walking, or transit trips. So fairly detrimental to people's health. If you think about fitness, if you just need to walk a couple blocks, or maybe you could bike to work or something along those lines. Again, that's not the biggest deal. It's kind of like your own personal choice in my opinion, but something that this blog not mentioned. They increase traffic fatalities. I don't fully agree with that one. To me, I mean, there's gonna be fatalities regardless of whether it's an Uber or not, so I don't know if I fully agree with that one, but this last one I kind of want to talk a little bit more about. It's about how they hoard their data, okay? So everybody knows that these tech companies are basically spying on us, okay? So how many times have you talked about something right in front of your phone, and then the next day or the next hour even, you get an advertisement to buy something along those lines? Let's say you're talking about going on vacation with your wife or your significant other or your friends, and then boom, you get a TripAdvisor advertisement the next day on your Instagram or your Facebook. It's absolutely insane. So one thing, if you guys didn't know, Uber does actually track you while you guys are offline. I believe you do have the option to turn that off now. You just have to kind of go into your settings and change that on the app. But for the longest time, Uber actually tracked their customers where they were at all times, even while they weren't within the app. So hoarding their data, it's kind of creepy. They're not very open about sharing this data. So they hoard their data. That's not a good thing in my opinion. They basically spy on us. So if you're someone who cares deeply about privacy, this is something that you might be worried about. Anyways, I digress. Now let's talk about some of their diversity problems and some of the other bad headlines coming out about them. So they're basically a white male dominated company. I found this article here that says they're about 44% white, 33% Asian. I don't want to get crazy into the racism here, but there is a lot of talks that this is a racist company, especially at the senior management level. There's also been hundreds of stories of harassment. I've personally read a few of them myself. One of them talked about how one of the high-level execs in the company was a female, and she had basically received an email from one of the other execs in the company saying that his wife is okay with an open relationship, and he was wondering if she wanted to experiment. So there's a lot of those weird type of stories going on with this company specifically, I've heard. So whenever you have like hundreds of stories coming out about harassment, racism, or any sort of misogyny, this isn't good for the company, okay? So something definitely to be worried about with this company. A lot of people kind of view them that way. Now, kind of tying into that, their head of diversity recently left the company, and one thing to note is they've only been public since May 2019, but they've lost a crazy amount of executives. The turnover at the executive level is absolutely insane with this company. I've never seen anything like it. All I can tell you is a lot of the times head level executives won't talk about why they left the company or won't be public about why they left the company, but whenever you have that many, it really, makes you think, what's the reason all these people are leaving this company? Are they unhappy? Is there something unethical that this company is doing? So definitely not a good look for them. Anyways, that kind of brings me to the end of this video. Let's talk about the conclusion. What do I actually think about this company? Okay, so despite all that I've just said, this is a billion-dollar company, okay? They're currently trading at $70 billion, and they've only been public since 2019. So since they've only been public since 2019, a lot of their future is kind of unknown at this point. There's a lot of factors which we won't be able to predict, such as legislative blocks in certain countries, any sort of like political assaults on the company, increased competition in other countries. I read something the other day that England is coming out with their own ride-sharing companies. They're certainly a pioneer in this space, but there's going to be a lot of copycats coming up in the near future. All I know is that tech companies today that have user data are extremely valuable in today's economy. Uber may not be profitable now, and it may take them several years to become profitable, but there is one thing that I do know, and they do fit a need in today's society, in today's market, and for consumers, what they offer is convenience. When you look at business, ultimately, I believe it should be a win-win situation for everybody. You shouldn't have to actually sell your company to someone else because it's making their life easier. That's what Uber is. You no longer have to call a taxi company and say, hey, I need to be picked up at this spot and driven to this spot. All you need to do is click a button on your phone, they show up, they drive you to where you need to go. Uber benefits massively from brand recognition. Everybody knows what Uber is across the entire world. They're a pioneer in this industry, and they certainly are more well known than their major competitor Lyft. On top of that, there's plenty of services that they can add to their business model, okay? So you have Uber Eats, where they have this food delivery service now. I'm sure there'll be some sort of package delivery service for Uber in the future. There's tons of things that you can add to this business model, and the have the capital to do it. Anyways, we know that their food delivery service is currently dragging them down, but I do like this company long term. I currently have no position in the company, but I am seriously considering investing in this company long term. So that's the video, guys. I hope you guys did enjoy. If you did, don't forget to smash the like button, share the video with a friend if you learned something, and leave a comment if you wanted to discuss anything, if you wanted to get in touch with me. Don't forget to follow me on my social media at Turnsy, and I do have a Facebook page, ETP Finance. Okay, guys, hope you enjoyed. See you guys in the next video. Peace out.